What exactly is accounting? Is it math, taxes, or complicated spreadsheets? And I can tell you now that accounting is not either one of those three things. The truth is, accounting is the foundation of every successful business. Okay? And businesses couldn't survive without accounting or financial information. I mean, businesses really couldn't exist without financial information. You need financial information in all businesses to make decisions. That's a very important word now. To make decisions. You may want to make a decision about salaries, to raise salaries, to hire someone new, or about inventory. Should I buy more inventory? Many things. But you have to make decisions about what's on that balance sheet, about your assets, your liabilities, your income, and your expenses. And I'm going to take some time to explain that to you. My name is Benjamin Strickland, and I'm a CPA, and I've been a certified public accountant for quite a while. I teach accounting on the college level, and I also practice accounting. And I have taught many, many students in accounting, or I've taught them their accounting courses. These were students majoring in accounting. And I'm very proud to say that out of all of the accounting students I've taught, I have produced pretty close to 100 students who became CPAs. Now, many of them, there are others who are CFOs, CEOs of major companies that have their own accounting firm. They're doing several things. They have their own businesses, but I've had a lot to do with helping other students become certified public accountants. So this should indicate that I should know just a little bit about accounting. Before I proceed, make sure you subscribe to my channel and click the notification bell. Subscribing helps the channel grow and it ensures you don't miss any of the valuable content I have coming your way. Thanks so much for your support. Now, here is the definition of accounting. Accounting is the process of recording, organizing, classifying, and interpreting financial information or financial data for the purpose of making decisions. And all of these decisions are financially related. These decisions are important for the purpose of understanding the performance of the business, whether or not you have made a profit or you have incurred a loss in terms of operations, whether or not you have more liabilities than the business can handle, who owes you money in the terms of receivables, for example. Think of it as a system, all right, that tells the story of money. And when I say money, I'm not just talking about cash, even though cash is very, very important in the operation of a business. But you want to know, where financial resources went, all right, what it means for the business in the future. And all of this encompasses your resources. And I'm going to talk more about resources in the financial statements momentarily. But your resources, your liabilities, how much income you've earned, where you earned it from, your expenses, and whether or not these expenses relate directly or indirectly to what the business is doing. Now, accounting I said it, accounting, many people say accounting is the language of business, which is true because it communicates the financial health of the business. But accounting is not math. You don't need to be a mathematician to understand accounting. What you have to be able to do is understand business logic. And you really should already have some sense of this in your own personal finances if you are managing and you understand what that is. You should know when you're making enough money to to purchase whatever you want to purchase. Now all people don't do that. Or whether or not you're purchasing a home, say for example, that you can afford or you cannot afford. So all of these things you have to take into consideration in a business. And I'm talking about all businesses, whether it's a service-oriented business such as a doctor, a lawyer, or an accountant, or it's a business that sells a product, or a governmental business, a manufacturing business, or a retail business. All of these businesses utilize and have to have or have to understand and see the reports of its financial information to understand the health of the business so it will know how to make future decisions. I've already mentioned to you the purpose of accounting in terms of accounting, recording, classifying, interpreting financial information. But the purpose of accounting is very, very simple. You answer certain questions such as are we profitable? Can we afford to grow? Maybe should we back up a little on what we're doing because we can't afford what we're doing. Maybe we should sell part of the business or sell all of the business. Should we cut cost? Even individuals, or before I get to, yeah, I'm talking about individuals, but you use accounting or financial information to prepare your tax return and to also prepare budgets or planning for retirement. You need this information. But I want to give you the 4 required financial statements that all businesses are required to produce. All right? The balance sheet. And the balance sheet contains that accounting equation. Assets equals liabilities plus equity. An asset is really all of the business's resources that the business either own those resources or you have an interest in those resources. You have cash, but a business does not own cash. It has an interest in cash, which means it needs to be managed properly. If you have receivables, you don't own receivables as a business, but you have an interest in it. But you could own equipment. You could own a truck. You could own office equipment. You could have short-term and long-term investments. All right? You go down to the liabilities, accounts payables or a loan payable. Who do you owe money for? Are you paying those liabilities on time? And then the equity, which is assets minus liabilities, equals equity, which is the book value. Not the market value, but the book value of a business. And as you can see in that accounting equation here to your probably your right, you see that assets, which is say 100,000, and your liabilities could be 30,000 plus 70,000, and they must always equal. The other financial report is the equity statement, okay? The cash flow statement, and the cash flow statement just links to the bank reconciliation, which is very, very important. But whatever the bank reconciliation gives, the cash flow statement should equal the same thing. And all the cash flow statement does is indicates where did all your cash come from, what sources did it produce the cash, and what the cash was spent for, and that should equal your ending cash balance. And of course, that most important statement is your income statement, your statement or statement of profit or loss, where you have your income minus your expenses. That gives you either a profit where your revenue or your income is more than your expenses, or vice versa, you had a loss in operation where your expenses or more than your income. Okay, there are many different types of accounting. You have financial accounting, and those financial reports are for those external users, even though they are produced by the business itself, but they are for external users such as investors, creditors, regulators. Then you have managerial accounting, where that's accounting you basically use for internal decision making. Uh, Managers plan the budget and set goals. Then you have tax accounting, where you have to know the tax code in order to apply the financial information. You have governmental accounting, where all of your governmental municipalities, city government, state government, um, federal government, all of that is accounting for. There's a special accounting standards for government, for the government or government entities, and also last but not least, that I do and have done, audits. You have to use CPAs to audit those financial statements to make sure they can be relied upon by investors, creditors, those individuals who would have an interest in loaning money to the business or someone investing in the business. Why does accounting matter? Because it's everywhere. All businesses use it, whether it's a small business, a medium sized business, a corporation, government, manufacturing, service oriented business. And without accounting, there would literally be financial chaos because no one would know the performance of the business and no one would be able to make any decisions about the business. But don't get it wrong, accounting today is not just someone sitting down with pencils and an adding machine and paper to write on. Accounting has grown to be digital. I use accounting software. As a matter of fact, I designed my own accounting software. You have cloud software, artificial intelligence. I know you're familiar with AI. And real time reporting, it's made easier with all of these tools than ever to track and analyze finances. But the core principles, the main core principles, accuracy, transparency, and decision making remain the same, regardless of what tools are being used for the accounting information. So, what is accounting? It's not just numbers, it's the story of money, financial activities, the heartbeat of a business, and the guide for smart decisions. If you understand accounting, you understand business. And that's why accounting will always matter. Drop in the comments what you do as an accountant, or if you working as accounting, drop in my comments what you do and what type of accounting you do. And if you have a question, just ask me a question. I'll be glad to answer it. Thanks for listening to me, and I'll see you later on.